Hello everyone, welcome to the Ichimoku charts.com daily analysis for wheat for Tuesday, April 30th, 2013. Well, a continuation of the trend to the upside for today's trading. Previous day's trading we had establishment of a first time frame uptrend and a very bullish candle. A candle with a very large white body and a candle that closed up towards the high, suggesting that the buyers had found some very solid upside momentum and some momentum that we haven't seen for quite some time in this market for the past 2 weeks. We've seen some good, decent follow through for today's trading. Another white body candle that's closed up towards the high, suggesting that the buyers are attempting to maintain the momentum. They have lost a small amount. The size of the white body is slightly reduced on the previous, so that does raise some doubt about continuation. And even though the market has closed up well above the midpoint level, we do have a shadow on the top representing downside price rejection, and that basically coincided with the market testing towards this resistance around 740. And that was previous resistance, and that has come into play. That area also coincides with the top of the cloud, and that is very, very strong and crucial resistance to this market if we are going to see this bullishness maintained. In terms of the shadow on the bottom, however, we did see the market find support when it tested down below the bottom of the cloud, and this highlights how the cloud can act as very, very strong levels of support in this case, or resistance in this case of the shadow at the top. Looking at this current candle, how it's developing, we are seeing some solid price rejection in a black body, so there is a possibility of this market trading lower. We do need to watch 722 as potentially strong support, and then also 716. Now in terms of the pattern that we were watching previously, we had a rectangle type pattern. There was potential for that to be a triple top pattern, but we didn't see a breakout down below the troughs in the pattern. So a rectangle pattern, here's the prior trend leading into the pattern. Not an ideal pattern where the size of the congestion area is very much larger than that trend, than the extent of the trend leading into it. But still we have seen this congestion, and we have seen this breakout now up above the top barrier of the pattern, which is something we were looking for, either breakout above or below. We needed to be reactive to that. So here we've had a breakout and a close up above, and in this case a fairly bullish close. So this does give us some confidence in the potential of the market to meet the target, which is the extent of the move into the pattern, in a trending move into the pattern projected out from the breakout, and that gives us a target up around this 770 level. The only problem here is obviously the market has to interact with the top of the cloud, and that has very strong potential to limit this move. So in terms of trading this pattern and the breakout, probably not a good pattern to trade, because we were going to meet resistance up around the top of this cloud, so not a very good pattern in terms of risk. The reward was certainly there if the market could trade up through there, but the risk of the market failing to trade up through the top of that pattern was quite great. Now in terms of the Fibonacci extension, we're examining the relationship of the first time frame uptrend to the previous time when the market was trending up, and here we saw the market interacting with the 261.8%. We have seen strong rejection from there for today's trading, and that does suggest a possibility of this market changing trend and coming off, and that's what we're seeing at the moment. Having said that, however, we haven't seen the sellers come into this market with this current candle. The buyers have still maintained control, so the amount of price rejection we've had here is only minor, but let's watch how the market reacts to this 261.8% level if it does trade to there for today's trading. It doesn't look as though it will, based on how the market's trading at the moment. And also with the Fibonacci retracement, we're in an expansive mode of that. It's confirming what we're seeing with the previous Fibonacci technique, and we've seen strong, or not strong, moderate price rejection from the 261.8% level. A failure to close up above there does suggest potential for a change of trend, but certainly not supported by the sellers in this current candle as the market has finished trading. We are seeing selling at the moment, and that does suggest that this level could hold and we could see a change of trend. The market has tested above there and being rejected from there again. So let's wait and see how the market reacts. The only problem here is that any potential downside move is now limited by the bottom of the cloud. Now in terms of Ichimoku, a neutral market in big picture terms, the market is trading within the cloud, so neither bullish nor bearish, so we do really need to wait for a breakout either above or below the cloud. Previously the market was trading down below the cloud for quite a long period of time and finding resistance at the bottom of the cloud, and now quite a change of sentiment where we've seen the market break out above the congestion area, strong bullish candles, and the market now neutral, so moving from negative to neutral in big picture terms. The market is bullish in the medium and fast term time frames, so giving us some hope of the potential for the market trading up above the cloud and turning positive. We do have a flat Kijun-sen here, and there is a possibility of price action being attracted back to that flat Kijun-sen, so we do need to watch that. But looking at today's trading also, the market found support below the Tenkan-sen, so that will be an important area for the trading over the next few days if the market does test down below the bottom of the cloud. But just looking forward, very solid resistance at 740. The market will need to find some very strong bullishness to trade up above the cloud and close up above the cloud, and that's what we're looking for us to be bullish. But by the same token, very substantial support extending down to 716 at the bottom of the cloud.